This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HTJ Tax. And we're live. Hello, welcome to 7 Things to Know About Taxes for Location Independent Entrepreneurs. I use the term location independent entrepreneurs because somehow digital nomad has certain connotations. So I thought, it's a more neutral term, but basically it's about business owners who work remotely, not just within a jurisdiction, but work remotely among jurisdictions as well. Okay, so let's begin. Next slide, please. Just to provide some context, so our team is a semi-autonomous team within a wider practice called Rowland Asia Pacific. We have 30 offices in 12 Asian countries, so we're as far north as Beijing and Tokyo, all the way down to Australia, Sydney. So we are able, my point is that I'm not a one-person show. So I'm a part of a team that's able to deliver the comprehensive services that our clients need and deserve. And the idea of a team I'll get into later. Next slide, please. I'm actually based in Singapore, but like many of you, I work remotely, which means that I can be in one of 4 places primarily. And next slide, please. We are also a member of Fusion International because our practice saw clients demanding more expertise for Europe. We joined this network of tax practices, and that allows us to tap into expertise that we do not have in-house, particularly in European jurisdictions. And today we're going to focus on Portugal, because we're experiencing quite a spike in demand for our services from people who have been based in Portugal. Next slide, please. So as I mentioned before, I'm typically in one of 4 great cities. Right now, I'm recording this video in Lisbon, Portugal. Now, because I'm licensed by the US Department of Treasury, I'm required to say that nothing we say here on this video should be construed as advice. We're giving you a general conversation about general principles. To get what we call actionable intelligence, you need to engage someone who knows your situation inside out. Next slide, please. And that's it in writing, and this is how we basically stay out of trouble. Next slide, please. So I want to talk about 7 things that you as a location independent entrepreneur needs to keep in mind when you're devising and formulating a tax strategy. Now, it cannot be a how-to list, and that is virtually impossible, because each person's situation is so different. You may think the person next to you or your friend or your colleague or whatever is exactly like you, but you don't know what their other residencies are, what their spouse may be in terms of citizenship or residency that has an impact on the situation, their earnings, and the source of their earnings as well. So there's so many factors that come into play. It really requires someone who knows your situation inside out to guide you. So what we're seeking to do is not give you all the answers. You're not going to emerge from watching this video as an expert, but what we hope to arm you with is we hope to equip you and arm you with the right questions that you need to ask from the advisors that you'll be bringing on board to help guide you. Next slide, please. So number 1, the concept that I want to arm you and equip you with, the first one is flag theory. Now, flag theory was coined allegedly by this guy, Harry Schultz, in the 1950s. I'm aware that there are companies that have taken on, created a brand around it, or they may have incorporated it. I'm aware of them in probably 3 or 4 jurisdictions, people who are apparently unrelated to each other. I don't know if they know each other, but they have borrowed the term. But essentially it means a diversified lifestyle. one in which you have your passport or your citizenship from one jurisdiction, but that may be different from the jurisdiction in which you reside, which is different from the jurisdiction in which you have your business, and is different from the jurisdiction in which you store your wealth, and so on. So there can be 5 flags. I've heard people doing 6 or 7 flags, but the principle is the same. Just like when you are investing your money, you have a diversified portfolio. Similarly, when you diversify your lifestyle, you have planted flags in different jurisdictions, so you're not exposed to the vagaries and uncertainties of any one particular jurisdiction. Next slide, please. So I said I wanted to talk about 7 things. The second thing I want to draw to your attention is fake news. You would be tempted. I mean, it is confusing. If I were not a tax practitioner, I'll confess to you that I would be confused. There's so many people giving advice, and it's hard to know who to take advice from. What I can tell you is that you are probably better off looking for someone who's qualified in the jurisdictions in which you are exposed. And the reason I say that is twofold. One, if things turn out to be wrong, you have recourse in that they have, I mean, we have professional liability insurance. If we get things wrong, our insurers will pay. If we misrepresent ourselves, or if we act beyond our capacity, we will have to pay the price. But more importantly, if it is that you fall afoul of any tax authority and you show them that you have taken qualified advice, they tend to look at you more leniently, because obviously your intent was good. You did the right thing. You sought out competent advice, and they'll probably take a dim view of the person that you're astray. Now, if it is that you took advice from someone in a Facebook group or someone on a YouTube channel or whatever, then that's all on you. You have no recourse if anything goes sideways. And the tax authority doesn't want to hear that you got advice from YouTube or Facebook group, right? So, but at the end of the day, you know what? We're all sharing this one philosophy, which is freedom, and we all should be free to do what we want. And just like with medical advice, some people get sick and they go to a doctor who's qualified by the medical board in whatever jurisdiction they're in. And some people go to faith healers or alternative healing traditions. And that's all fine. It's just that if you go to an alternative healer and things go sideways, you don't have recourse. And, you know, there's a higher element of risk. And that's the thing here. Now, one of the most controversial views, I'll get into the place of effective management on Nexus later on. I'm also going to take a deeper dive into Portugal, because we're getting so many questions from Portugal, or from people who are considering Portugal, or people who are in Portugal. But one thing I want to get into here in this slide is the idea of paying no taxes. I know that it is a subject of furious debate. You know what? It's up to you. Once that person is qualified, and you know they are practicing what they preach, in the sense that you know they've tried it, or their clients have tried it and it works, then go for it. But what I've found is that I don't see any of those practitioners. I see very few of them actually saying that it's possible, and and they exist, or they're practicing from an advanced economy like in Australia or Singapore or a Western European country or North America. Chances are they're in like in Panama or Belize or in Malaysia, something like that. Jurisdictions that are less rigorous when it comes to giving advice. And and there may be many reasons for that. But one of the things that benefits them is, of course, there are no consequences to their actions, because giving that sort of advice from those jurisdictions has certain consequences. In addition to which, we've found, and you know, and anybody who does enough research, you know that you can set up really fantastic tax strategies while still remaining in Western Europe, while still living in North America, Australia. It just requires that you take advice from a competent professional. So I believe it is possible to do it, but you need to do it with the assistance of professionals who know what they're doing. Now, a lot of the conversation, including mine so far, has been about tax rules. Now, bear in mind that in parallel with tax rules, you also need to look at banking rules. And that's where people get caught out. What do I mean by that? I'll give you the example of a prospect that we had in South Asia. He is originally from Western Europe. He's a DJ. He must have been popular. I never heard of him, but maybe he's popular. He did well over the course of his career. And for personal reasons, family reasons, a close member of his family fell ill, and he wanted to move back to the Western European country to be with his close relative. And he wanted to take money back to help provide extra care for them in their time of need. Unfortunately, when he went back to the bank account that he opened in that city as a child, they told him that he could not bring the money back because he'd saved his money in a bank account in a South Asian country. Why couldn't he bring it back? Because he had no means of proving that the money was clean. I mean, give anyone 5 minutes and they can prepare like invoice or financial statements in Excel. So they didn't trust that. Give somebody 5 minutes, they can prepare a website. So he tried that. They didn't trust the website, which spoke about how accomplished and popular DJ he is. What most banks feel comfort with would be tax documents, i.e. documents from another government, which says that the money is clean and clear and has been taxed. Remember, banks in Western countries, they're running scared. They've been facing astronomical fines for facilitating money laundering. So they're super scared. That means that their default position, if they are unsure, they will reject the transaction and kick it back. So we've seen dozens of clients, we have seen dozens of people who, because of poor advice or lack of proper advice, they are unable to bring their money back home. And as a result, they themselves are locked out of their country of origin because of this idea that they can live tax-free for years and gather money without consequences. So, I mean, this is aside from tax rules. These are the banking rules that need to be considered. This is stuff like the Common Reporting Standard. This is stuff like DAC 4, DAC 6. This is stuff like FATCA, which makes the idea of remitting money without consequences or without the oversight of authorities near impossible right now. The Portugal Tax System, so number 3. So I said we're going to talk about 7 things. We're number 3. So the Portugal Tax System is pretty much a topic of interest because many people are finding Portugal to be a great jurisdiction to be in right now. Portugal, like most European countries, it does tax you on your worldwide income. So please bear that in mind. And the taxes could be pretty high. It could be up to as close as 48%, or depending on what else you have on top of that, it could be 50%, right? So it could be 50 cents on the dollar. But there are certain programs that allow for some sort of tax relief, which we'll touch on in a bit. Next slide, please. Everyone is asking about the NHR or the non-habitual residence program. That allows you to, now again, I said that there's a lot of misunderstanding online. You cannot live in Portugal tax-free. That when someone paints with such a broad brush, just be careful. They're always nuances. There's always fine print. There's always exceptions. There are always rules. There are always criteria that need to be met. And the NHR program is no exception. Next slide, please. So it's not automatic. You need to apply for it. First of all, you need to, of course, be resident in Portugal. You need to get a tax ID. And once you have your residence and your tax ID, then you would typically apply for NHR status. Next slide, please. An annual tax return would still be due, but it's just that, so you do declare all your income as you typically would, but having NHR status would allow certain classes of income to not be taxed or to be taxed favorably. Okay, next slide, please. So the main feature is that people say all your income outside of Portugal is not going to be, no. your passive income or your unearned income. So there are basically two buckets of income. I know you can divide your income into many more buckets than this, but for the purposes of this discussion, you have your income that you earn, so like salaries, wages, bonus, so in exchange for a good or service. That's your earned income. And then the other bucket would typically be your unearned income, which we'll call passive income. So for example, if you have a rental property, or if you have shares in Facebook, those dividends, so that type of income, that's called passive income. Now, all things being equal, and when you are accepted for NHR, that you'll be allowed to live in Portugal, and that unearned income from outside of Portugal will not be subject to taxes. Next slide. Okay. So remember the two buckets of income that we've spoken about. There's earned income and there's passive income, just for the purposes of this discussion. If you have earned income, it can, and you're a tax resident of Portugal and you benefit from NHR status, you can legally avoid paying taxes in Portugal as long as that money has been taxed outside and it is not booked in or obtained from a blacklisted jurisdiction. Now, there's a list of blacklisted countries from the OECD, and again, that list changes. So I have a list of jurisdictions at the end of this deck, but understand it was valid as at earlier 2020, and the time in which you're watching this video, it may not be valid. So there may be countries that may have been removed from that list, and there may be countries or jurisdictions that may have been added to that list. So please bear that in mind. But anyway, all things being equal, if your employment income is exercised abroad, or your self-employment is exercised or deemed not to be derived in Portugal, so the easiest way to prove that is if you actually provide the service while outside of Portugal, then it would not be subject to taxes in Portugal. Okay. And this also assumes that it's an activity that's on the high value added list. And the high value added list, just like the blacklist jurisdiction, it changes with time. So there's a list that's valid as at the time of this video, that's at the end of this deck. But it could have changed by the time you view it. So please check with your tax professional and make sure that you're looking at the most up-to-date list as you engage in your planning. Next slide, please. Quite controversial is foreign pensions. I'm not sure whether there's a location independent individual watching this, whether you would be concerned with this, but perhaps for your future tax planning, it may be a concern. Previous to 2020, foreign pensions were not taxed in Portugal. There were some complaints by some other jurisdictions, which is not relevant here, but just to cut to the chase, Brussels put pressure on Portugal to levy a 10% tax. And on the face of it, it does seem to violate the tax treaty. And that's where we say that these things are highly nuanced and you need a tax professional. So you look at the double tax treaty, and I think you look at Article 20 maybe, and it talks about foreign pensions, and it says you're not supposed to tax pensions. And on the face of it, it does seem to contradict the treaty. But there is a way around that, and that's where you have a qualified professional who understands it. So you won't be taxed on the pension income twice once it falls under qualified pension as defined by the treaty. But yes, Portugal will tax it. Next slide, please. So yeah, so previously we spoke about salaries that were derived from within Portugal, from outside of Portugal, whether it be self-employment or on an employment contract. This applies to stuff that is derived from within Portugal. So if it's derived from within Portugal, it's 20% flat tax. Okay, assuming again, high value added activities, the list of which is at the end of this deck. Next slide, please. This is the list of high value added activities which are which are treated favorably. But again, this is a list that is valid today. It may not be valid when you're watching. Next slide, please. So takeaways, would be Portugal is a great jurisdiction, and we didn't touch on it, but I mentioned it in passing. For those involved in crypto, it won't be subject to crypto transactions aren't subject to VAT, and you're free from capital gains, and but understand that that's because, like, unlike other jurisdictions, Portugal sees crypto as a currency, so they're not going to tax the currency unless, and this is where we say things in nuance. It's not that all crypto is tax free in Portugal. They're not going to tax it assuming that you're just using it for currency transaction or you're using it to buy or sell something. In that case, the business activity you're in will be subject to tax as per Portugal's tax rules. So trading in crypto won't be subject to tax, but using crypto as part of another transaction may trigger tax. In addition to it, if you're a crypto trader, then all bets are off. That trading activity was subject to taxes in Portugal. I mentioned that in passing. And I also call out the blacklist here of the jurisdictions. Again, this is valid for 2020. It could change by the time you're watching this. So if you engaged in, if you have a business set up in any one of these jurisdictions and you're tax resident in Portugal, please bear in mind that certain rules would apply. And Portugal would reach into that and would not respect the veil of incorporation between yourself and these companies, and would seek to tax these companies in these jurisdictions as if they were Portugal companies. Next slide, please. So number 4, remember I said we're going to talk about 7 things. This is number 4. We're going to talk about direct and indirect taxes. So normally when people are tax planning as location independent entrepreneurs, they're pretty clued up on in terms of direct taxes. So that'll be their personal taxes as individuals and their corporate taxes for their companies. And I hope you have a company. This is one thing I'm a strong advocate of, is using a company. So that it's not just great for tax planning, but also great in terms of asset protection, protecting your IP, intellectual property, your ideas, and protecting you from lawsuits and litigation as well. Anyway, so everyone is clued up on direct taxes, but many people aren't so clued up on indirect taxes. Here in the EU, of course, there's VAT across the EU, and there's a threshold, and so you speak to your tax advisor about that, and there's an easy way of registering on a system called MOS, but if you are exposed to the UK, please bear in mind that as of the end of this year, the UK should be out of the EU and you need to register separately with HMRC in the UK. So please bear in mind that you have indirect taxes, and the difference between direct and indirect taxes will be direct taxes you pay direct to the tax authority, whereas the indirect tax, you pay it to the person you purchase something from, and then they pay it on until it gets to the tax authority. So similarly, if it is that you're selling a product and it would be subject to VAT or indirect taxes, sales and use tax in the US, or GST in Singapore, or however it's termed, it is indirect tax. You need to build it into the price of the good or service that you're providing, and you need to have the infrastructure and be prepared to remit that on to the tax authority. Next slide, please. Number 5, and this is something that people easily forget, that, or perhaps many people aren't aware of. So you think I incorporated in a so-called tax haven like Dubai or BVI or Bermuda or whatever, or Delaware. It's supposed to be 0% tax. I understand that, but there's something called your place of effective management, or Nexus. There's a concept of Nexus, a subset of which is your place of effective management. So if, for example, you are here in Portugal and you're running that business that's incorporated in Delaware or BVI or Dubai or whatever, you're running it from here and you're a tax resident here, then the tax authority here may have grounds to tax that company as if it were a Portugal company. Similarly, if you're in the UK, or if you're in Singapore, or if you were in Indonesia, in Bali, or if you're in Chiang Mai in Thailand, and you're running that foreign company from within their borders and you're a tax resident there, they have grounds to tax you. So please keep that in mind when you're structuring your holdings. Next slide, please. And so that's one aspect of the concept of Nexus. but Nexus could be pretty nuanced. And I think people who are feeling that the most right now are online sellers, people who are selling goods online, for example, drop shipping, Amazon FBA, Walmart, Lazada, whatever the case may be, right? When you are selling goods into a territory, even if you're not physically based there, you're just selling and you just have buyers there or maybe stored in a warehouse, it may trigger taxing rights by the authority in that jurisdiction. So again, please keep that in mind. Next slide, please. Digital taxation. Now, this is the most controversial in the sense that it's brand new and it's an emerging area of tax practice. It's brand new. The rules are in a state of flux and they are coming out. It feels almost weekly. Some jurisdiction prints something or the other. Now, of course, they're physical goods, they are digital goods. So for example, you sell something and someone downloads it, and then they're online services. So people who provide service, consultants, coaches, whatever. Depending on the jurisdiction, it may trigger digital tax. And again, I can't give you a comprehensive overview on digital tax, but all I can say is please, please speak to your tax team about this. And next slide, please. This is a list of 5 questions that I found, and I find them quite helpful. I mean, the list that we would use is quite much long. It's much longer than this, but at least these 5 questions get the conversation started. So just by having a warehouse, so for example, you are selling into the US on Amazon FBA, and people that are buying your stuff are in New York, but it passes through an Amazon warehouse in New Jersey. It may trigger taxes in New Jersey just by the fact, that you have products passing through. Even though it's a completely online transaction, you're not in the US, you're all the way in Portugal or wherever, you may become subject to taxation in New Jersey just because of a warehousing issue. Or if you have some affiliates, you're part of an affiliate program, they may be clicked through Nexus. It becomes, it's pretty involved. And again, it's an evolving field. So the rules are changing pretty often. Next slide, please. I've seen lists like this, but again, it's no way that something like this could capture the complexity. So for example, let's say next slide. In the US, and again, you have 50 states or territories, but you have 50 states, but in terms of sales and use tax jurisdictions it's more complex. So you have about 10,000 sales and use tax jurisdictions in the US under 50 states. I know it makes no sense, but hey, that's the way it is. And I give that as the most extreme example. And some of those taxes are due quarterly, some of them are due monthly. So, and not only do the periods vary, but also the amounts. So for example, the amount of sales and use tax changes over time, changes over the course of a year. In some jurisdictions it does. So definitely you want to be looking at technology. And even if you use one of the 2 main software providers for something like this, understand that some jurisdictions are still kind of old school and they need you to paper file. So, again, my point in saying that is that it's something you need to be aware of. Next slide. So where do we sit? Where do we sit at this point? So my point is this, and brings me to number 7, is that you definitely need a team. Anybody who's sitting there pretending to be a one-person show that knows everything, they're just deceiving you. You need the level of complexity with taxes, and especially when you're moving among jurisdictions, it's it's incredible. The layers of complexity are incredible. The rules are changing all the time. Just staying on top of them is an impossibility. But again, you can always, it's a free world. You can take advice from people who are not qualified to give it. And I always say when I'm giving a talk, and I confess, I'm completely honest, that tax practitioners will tell you that at least half their income is derived from helping clients clean up the mess that they have, whether the mess has been created by them trying to do it themselves or by them taking advice from one not qualified to do so. And so it's, we must confess to some extent a conflict of interest in that if you don't listen and you go off and you do your own thing, or you listen to someone not qualified, you can, at some point in time further down the road, you will pay the price. You will pay the price. But if you want to be proactive, you want to build a foundation that's strong and robust and is sustainable, then you want to build out a team. Now, it may not be about getting a board of directors, but a team of advisors. So you have someone who gives you legal advice, customs advice, or who to tap into for customs questions if you're shipping goods, and similarly cross-border tax issues should be part of that team. So with that in mind, that's it. Thank you very much.
Here are 4 ways we can help you. Number 1. Sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth. We can quote for doing your US international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.